Hello and welcome. You're watching Morning Brief at 9. I'm Shweta Kothari. On the show today, we will discuss how to manage your money and personal finance tips. Should you buy on dips or wait for markets to correct? All that and more with Feroz Aziz on Morning Brief at 9 coming up shortly. With me, Shweta Kothari on Morning Brief at 9. Let's take a quick look at the top stories we are tracking this morning. Former SEBI Chief Madhabi Buch moves Bombay High Court against stock market fraud FIR. High Court to hear the matter today. India's manufacturing sector growth fell to 14-month low in February amid softer increase in new orders and production. India Manufacturing Purchasing Managers Index registers 56.3 in February, down from 57.7 in January. Health insurance costs have gone up sharply. Renewal prices rise by 30%. About 1 in 10 policyholders miss renewing their policy in the current financial year. This as per a report by Policy Bazaar. Paytm slapped with fema violations from Enforcement Directorate for allegedly making foreign investments in Singapore without informing India's banking regulator. Shares tank 2%. Ola Electric to cut 1,200 jobs amid financial losses, declining market share. Layoffs come just months after the company made 300 to 400 employees redundant, citing stronger emphasis on profitability. And women borrowers are on the rise. A civil niti aayog report shows 22% growth in women borrowers over 5 years. Gold loans emerge as a preferred borrowing option for women, with 4 crore loans worth 4.7 lakh crore rupees accounting for 38% of all loans taken by women in 2024. The government yesterday granted navratna status to Railway Public Sector Enterprises and Indian Railway Catering and Tourism Corporation, the irctc. The navratna status is granted to public sector enterprises that meet specific financial operational criteria, allowing them greater autonomy and decision making. US President Donald Trump confirms 25% tariff on Canada and Mexico starting Tuesday, which is today, sending markets tumbling and sparking fears of economic disruption. Bitcoin jumps 20% as Trump announces plans for a US strategic reserve, including cryptocurrencies, with Bitcoin, Ether at its core. Those are the top stories we are tracking here on Morning Brief at 9. First up, the Indian stock markets have experienced a notable downturn in the last 5 months. The Nifty 50 alone saw roughly a 15.8% decline, falling from 26,277 to approximately 22,124 as of yesterday. Sensex corrected to 14.9%, closing at 73,198. And this brings a lot of questions to retail investors, whether this is the right time to invest in equity mutual funds. Should investors continue with the monthly SIPs, or should they stop their monthly payments until there is a trend reversal on the Lal Street? To answer all those questions, joining us on the show is Feroz Aziz, Deputy CEO, Anand Rathi. Feroz, always a pleasure speaking to you. Thank you very much for taking time out. I think I'm going to begin with the most basic question first, and that is, what should investors do right now? They're jittery, markets are not giving them similar returns vis-a-vis last year this time around. What should they do? Should they stay invested in equity mutual funds, or should they wait for some green shoots?
Good morning, Shweta. Like you rightly said, this is one of the most popular but yet a basic question. If I were to be asked this question which you have, I would tell the investor that reflect upon what you had thought when things were good. When you invested, of course you thought long term, point one. Now, where's the long term? The long term is nothing but going through the process of the short term painful process to reach the long term. The second is when you investing in a systematic investment plan, for example, you're investing at different points in time. And we've always heard that volatility is a friend of a systematic investment plan over the long run. And in fact, if you look at history from 1993 when mutual fund industry was privatized, and if one were to actually do a 10-year SIP, if the first 5 years have been bad, the subsequent 5 have made up and more for the first 5 years. So much so that if the first 3 years are very good, you don't have to be too excited because the 10-year return is going to be 12-13%. If the first 3 years have been bad, the total 10-year return has been 20-21%, even in a flexi cap fund. So point one I'm trying to make is stay invested, remind yourself of what you were thinking when you started your investment. Second, like Navneet Monath, I was hearing him somewhere, and he says that bad news and good prices don't come at the same time. Okay. So continue investing and invest more if you have the money at the sidelines.
All right. And now that, viewers know that they should continue investing, I think one of the questions that weigh in on everybody's mind is it time to rejig their portfolio? And if yes, what should they invest in more? Because one of the favorites of people that has emerged by the way of an asset class is gold. Looking at gold ETFs, which have been on the rise, as you can see on our screens, from December of 24 to December of 25, from about 640 crore rupees to about 3,751 crore rupees. Is gold the way forward? How should people rejig their portfolios?
Shweta, yes. Yes, should they rejig their portfolio? At least 60-70% of India needs to rejig their portfolio. Okay. Indian households need a rejig on two counts. One, because we've operated in extremes. Some people are completely in debt. Some people have gone the other extreme, having 70% in equity, 80% in equity, that too small cap. So I personally think the answer somewhere lies in the mid ground. So point one, now if you have, from a risk standpoint, if you have more than 60-50% in small cap, even after the carnage, you will have to mend your portfolio and come on the equity portion to not more than 20-25% in small cap. That's one. Second, India's asset allocation is not correct in our opinion. Why is it not correct? Because we have 92% of your last year's saving going into debt and debt-like instruments. Equity has only formed 7-8% of the last year's 35 lakh household savings. If the market is corrected, India has not invested in equity adequately, is why I would say your asset allocation needs to move to at least 50% in equity at this time and use that as an opportunity post-COVID, which is hard come.
All right, invest in equity, that's the word coming in. But, looking at some of the data that has come by the way of AMFI as far as, changing preferences is concerned, large caps is seeing some sort of, tapered interest from December last year to January of this year. You're looking at mid-cap, large cap, small cap funds there, and the interest that continues to sustain in the flexi cap funds. As far as what should investors choose going forward, should they stay invested in large caps, or should, the conversations around froth and small caps that continue to make headlines till date, is that something that they should be cautious of? Stay invested in companies with strong fundamentals?
Shweta, yes, there were a couple of very important questions in your question. So first of it, I would say let's go to the large cap debate. I think Indian investors have done a very sharp job this time around. If you look at the investing, even in the February number, we have an algorithm which tracks what is the daily inflow in small cap funds. I wouldn't be surprised when the numbers come in about 4 or 5 days, you would still see about 2,700 crores invested in small cap funds, which implies that the retail investors still ready to buy a dip. Otherwise, retail investors, unfortunately, always used to buy the frenzy and sell the dip. That's changed, point one. Point two, I think large cap should be 60% of your portfolio. Why should it be 60% of your portfolio? Because 27% of Nifty is banks, and banks are trading at their all-time low valuations, if P is any measure. So I would say large cap definitely 60% of one's portfolio. That's what our model portfolio currently reflects.
All right. And I know you don't give stock specific guidance, but I think, traditional investing wisdom will tell you invest in stocks. If you can buy on dips, why not? Especially with companies that have very strong fundamentals. And we've seen some of these companies, lose substantial part of their valuation, stock valuation. Primarily conversations around Tata Motors, Reliance. Should you buy some of these stocks? And if yes, what would your picks be?
See, I would just try and throw a color on the strategy. If you look at the NSE 500 stocks from 1st of January, there are some stocks which are in the positive, some substantive portions of them are in the negative. I would look at a strategy which tests the ownership pattern. See, fundamentals are there, but unfortunately investors don't close their apps for 10 years and open 10 years later. They want to see it every day, and every 3 days of fall creates a havoc. So I personally think if you want to look at fundamentals, you have to also look at it with how strong is the ownership. If you look at NSE small cap 250, which is the largest debate over the last couple of months, you see about 11 stocks till yesterday are in the positive territory from 1st of Jan, and there are about 239 stocks which are negative. So these 11 stocks which are positive implies that the owners who own these stocks are such strong long-term owners that you will not see very large risks when you own them. That's why they throw up a lower beta. So always look at stocks which have one of the most stable ownerships rather than the most fluid ownerships. There are stocks which have fallen 52%. One of the stock in NSE small cap 250 has fallen 250. The bottom 30-40 stocks don't get lured that they are cheap now. It will take its own sweet time for the confidence of the shareholder to be built, to be held for the long term. So as a strategy, don't just be lured at the price. Also look at what kind of solid ownership some businesses have, that even if there's a crash in the market, the seatbelt actually works and the airbag opens. That's what I think is the biggest barometer of value at risk when you're creating a direct equity portfolio, if not a mutual fund portfolio.
All right. And I want to spend a minute talking about gold, because gold has been a cornerstone of investment and cultural significance in India, from weddings to religious rituals and financial security. The value of gold runs deep in this country. As an investment asset, it has consistently been perceived as a hedge against inflation and a safe haven in times of economic instability, and a symbol of wealth and prosperity. In fact, just yesterday, Chief Economic Advisor V. Anant Nageswaran said that gold will remain relevant in wealth preservation, investment planning, and amid economic uncertainty more so. However, with gold prices now around 85,000 per 10 grams, many question whether this is still worth investing in. I think it's important to understand, Feroz, that, and a lot of viewers, of course, are also battling this thought, whether gold still makes value given the high prices of gold, or should you wait for correction? Now, everybody's of the belief that correction would come seldom and rare, but just yesterday, gold prices corrected about 1,700 rupees per 10 grams, which means that there is some sort of profit booking happening there as well. Should one invest in gold? Does that make any sense now?
Shweta, you're absolutely right. Of course, from an Indian standpoint, India has so much money in debt that it's just mind-boggling kind of wealth. So if one has a portfolio of, let's assume, 60% in debt, I don't have debt. I have a little more structured product kind of a portfolio for my clients. So if you have debt, at least half your debt should be gold. That's what I've been recommending. Because gold has the natural hedge, not just to the equity, but the currency depreciation. And that happens when there is equity markets are crashing. It's FIs are saying rupee is going to have a large push downwards and it will depreciate. So it has a certain hedging capability, not just to the equity market, but also to the value of depreciation of rupee as well. So I would say definitely, Shweta, it should form a part of one's portfolio. It should be half the extent of the debt you possess. If your debts are anywhere greater than 30%, you can definitely, half that money should be in gold. And now coming to the second part of the question, will gold correct? Since gold is a global asset, and in dollar terms, gold had not appreciated for long periods of time. It was at $800 an ounce in 2001, and it languished there till $1,400 an ounce just a few years back. So since the unlocking in terms of the gold prices in the dollar terms happened, which are largely driven by sovereign and the way countries gobble up gold and preserve it, I personally think gold will definitely be also a hedge to economic disruptions which we currently see in the world.
All right, Feroz, and before I let you go, I have to ask you, the kind of downturn we have seen in the markets, there was some sort of stoppage there yesterday, markets closing flattish, but Nifty 50 seeing a rough decline of 15.8%. Is that likely to now exacerbate, given that Trump tariffs will now come into place, kickstarting today on both Mexico and Canada, 25% tariff? How do you see that really disrupting markets this morning?
See, I think the worst for Nifty is behind us, because like on previous time I was on the channel also, I said the risk doesn't lie in Nifty, the risk lies in the broader market. I personally think Nifty is almost at its bottom, because the top heavyweights haven't performed. They are the lowest valuations, 20%, which is Reliance and HDFC practically, are not at any crazy valuation. So I personally think the heavyweights, the top 5-7 weights, are completely beaten down on the Nifty side. So I would say that.
Are you saying the worst is over? Am I hearing that correct?
For Nifty, on Nifty for sure, I would say if markets were to correct 3-4%, it will be difficult for the market to sustain there for even a month.
All right, and how do you really see an impact globally as far as those tariffs is concerned? Because that is something that really jittered the markets worldwide when it was first announced by Trump. It was later delayed, but today seems to be the day.
Yes, see, what happens is, since this news has been coming in pockets, this has got priced in. I don't think the actual implementation of that will have any impact on the market, because it's gradual fall. See, if you see, there are two SEBI circulars. In fact, one latest consultation paper has definitely spooked the market and the FIIs especially. You would see, I don't know whether you've gone through that circular in page number 8 and 9, not the circular but the consultation paper. There is a talk about capping long positions on a specific account, including FIIs, which I think is one of the most outrageous things which any regulator would have done globally. Capping long positions in the derivative markets has been spoken about in that consultation paper. So coming back to your point, I think that's more of the thing which will get unraveled, of how that consultation paper becomes a circular, if at all. I fear it became a circular.
All right, and in your assessment, is that likely to spook FIIs?
It already has. I think the 500 point of Nifty fall had some degree of contribution from that consultation paper, in my opinion, what I spoke to a few FII counters.
All right. Feroz Aziz, thank you very much. Always a pleasure having you on the show. Thank you for taking time out to speak with us here on News 9. Time now for a short break. We'll be back with more news and stories on the other side. You're watching Morning Brief at 9.
Women empowerment is all about letting the woman to remain the woman.
Perhaps you're right, because, we've seen what men have been doing all this time.
I think we are not nurturing and leveraging 50% of our strength, which are the women.
For an educated lady, even today, the problem comes when she becomes a mother.
If the world starts getting women-led, I think a lot of things will get corrected.
I 100% agree with you. Humans are different. Our needs of each other are different.
A lot of responsibilities unduly rest on women.
For too long, women have not dreamt for themselves. They've been too afraid.
When it comes to women, a very, very focused approach should be there to create an ecosystem for producing champions.
And that is where we have to set that sort of environment.
The message to women was, let the spotlight of your life be on you.
We were constantly praised for any little thing that we did well. After all, we are the product of the history.
We are all dependent on each other.
The men like you speak for women, speak with women.
That is the woman that you are. That is the woman you always wanted to be.
It will only grow from strength to strength.
I'm a positive thinking person.
I am defined by what I do.
I'm very pleased to be here.
Thank you, Varun. Thank you for those kind words.
I am, therefore you are. That should be the message from every woman to the men.
Watch Duologue with Varun Das this Women's Day all day long on News 9. News 9, English news as it should be.
मैं और आप एक जैसे ही तो हैं। एक बार मंजिल दिख जाए,
One shot of a century,
तो उसे पाने के लिए हम अपने कदमों को नहीं रोकते।
that looks out.
पर कभी कभी मेहनत और मंजिल के बीच रह जाता है एक फासला। खैर, मुझे उस फासले को मिटाने के लिए थोड़ी और मेहनत लगेगी, पर शुक्र है आपके पास है टाटा कैपिटल, जो मिटाए फासले आपकी मेहनत और मंजिल के बीच। टाटा कैपिटल, मिटाए फासले।
What does it take to be the greatest in the world? Perseverance, dedication, self-confidence. But there is one thing which truly sets you apart. Your inner strength. Sodium TMT Reebok. True inner strength.
Light, camera, and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week. Don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Welcome back. You're watching Morning Brief at 9. Let's take a quick look at how markets have opened this morning. In fact, they're all in red. Once again, Nifty 50 dropping by 0.6%. Just under 22,000 mark, so it's crossed and breached that level of 22,000, hovering at 21,985. Sensex further dropping 0.37% at 72,817 mark, holding that crucial 72,800 levels. Mid cap and small cap both down substantially. Mid cap down 1.25% at 47,382. Small cap down nearly 1% at 14,535. India Wix, the volatility index is up 1.9% at 14.03. That's the latest that is coming in as of this morning on Tuesday, March 4th. On weak global cues, remember Nifty was testing the 22,000 mark. It has now breached that. Even as it slipped yesterday, there were acute volatilities in the market yesterday, with Sensex now down 400% and Nifty struggling around 22,000. This downturn continues now for weeks over week. After a slight show of support yesterday, it looks like Nifty and Sensex both are continuing on their losing streak. Now, remember, this is a reflection of the global cues, and the market sentiments reflected globally on the back of those changes as far as Trump tariffs is concerned, which kick in today. 25% tariffs on both China and Mexico. And on the back of those weak global cues, both Nifty and Sensex taking a beating yet again. And moving on now, India's manufacturing sector is now showing signs of slowing down as of February of this year, with country's Manufacturing Purchasing Managers Index, or the PMI, falling to 56.3 from 57.7 in the month of January. This according to data which was compiled by S&P Global and released by HSBC, marking the slowest expansion since December of 2023. Remember, any figure over 50 means and marks expansion. But albeit the expansion in the month of February this year has been the slowest in last 14 months. The drop was driven by weaker growth in output and sales alongside a slowdown in input purchasing, which fell to a 14-month low. However, demand remains strong, with new business orders rising for the 44th consecutive month. The report pointed to inflationary measures as firms passed on higher labor costs to clients. Now, despite the dip, the manufacturing sector continued to expand, supported by strong domestic and global demand. Manufacturers remain optimistic about growth prospects in the coming months. Remember, India's GDP growth picked up in October to December quarter, rising to 6.2%, up from 5.6% in the previous quarter. This recovery was boosted by government spending, consumer demand and a strong Tariff crop output, marking a revival in rural demand. According to experts, while manufacturing expansion has slowed, the overall economy remains on a stable growth trajectory. And more women in India are taking control of their financial purses, their future, actively seeking credit, opting for gold loans and keeping a close watch on their credit scores. That is according to a new report by TransUnion CIBIL and Niti Aayog's women entrepreneurship platform, Microsave Consulting. The study shows a remarkable 22% annual growth in women borrowers, rising from 20 lakh in 2019 to 2.7 crore in 2024. Notably, 60% of these borrowers come from semi-urban and rural areas, marking a major shift in financial inclusion. Experts say that this growing participation of women in credit market is reshaping India's economy. Analysts also emphasize that empowering women to lead, innovate and thrive will not only redefine the country's economy but also ensure they play an equal and vital role in shaping nation's future. And moving on now, health insurance premiums have surged, forcing many policyholders to cut back on coverage or even cancel their policies. This as per a latest report which reveals that 1 in 10 policyholders are skipping their renewal this financial year, highlighting the strain of rising costs. Around 10% of policyholders saw their premium jump as much as 30% or more, but only half of them could afford to pay the full hike. Insurers blame the spike on worsening claims ratio, that is the percentage of claims compared to total premiums collected. And unlike steady increases, health insurance premiums also rise periodically, typically every 3 years, to keep up with soaring medical expenses. And medical inflation, remember, has also been rising double digit. Premiums climb with age, rising sharply in later years due to higher claims from older policyholders. Over the past 10 years, more than half of policyholders saw annual premium hikes of 5 to 10%, meaning rupees 100 premium 10 years ago would now be about 162 rupees to 259 rupees. So 100 rupees earlier, that premium today translates to 162 to 260 rupees. That's a substantial jump. Another 38% people experienced steeper increases of 10 to 15% annually, pushing the rupee 100 premium up to as much as 400 rupees. A smaller percentage faced even sharper hikes, with some premiums now soaring between 15 to 30%, making it difficult for policyholders to pay up these premiums, which are now exorbitantly priced as compared to what they were about 10 years ago. And former Securities and Exchange Board of India SEBI's chairperson Madhabi Buch, along with 5 others, on Monday moved to Bombay High Court. They are seeking to quash the recent order of a special court directing an FIR against them for alleged stock market fraud. Now, the Bombay High Court will be hearing their pleas on 4th of March, which is today. And the Anti-Corruption Bureau, meanwhile, has been asked not to take any action as per the direction of the special court order. Now, the case pertains to the Anti-Corruption Bureau Court directing ACB to register an FIR against former SEBI chief Madhabi Buch and 5 other officials alleging stock market fraud and regulatory violations. The complainant alleged that the accused persons engaged in round-tripping, insider trading and price manipulation, misleading investors into believing the company registered in 1996 was financially sound. So the case pertains to a company that was registered registered with SEBI in 1996. The complainant says that many of these people who are at the helm of power did not take any action despite repeated requests by the complainant, post which he approached the ACB, the Anti-Corruption Bureau. The Anti-Corruption Bureau, while hearing the matter, the court, while hearing the matter, asked for an FIR to be registered against Madhabi Buch and others. Madhabi Buch later approached Bombay High Court. Bombay High Court stayed any action on her. However, we'll be hearing her pleas later today. And let's now take a look at top stories we are tracking from world over. US President Donald Trump confirms 25% tariffs on Canada and Mexico starting Tuesday, which is today, sending markets tumbling and sparking fears of economic disruption. And Wall Street tumbles as Trump announces 25% tariff on Canada and Mexico, raising fears of a North American trade war and potential, in fact, stagflation in the area. And Bitcoin jumps 20% as Trump announces plans for a US strategic reserve, including cryptocurrencies with Bitcoin and Ether at its core. Trump pushes for a Ukraine-Russia peace deal but demands more gratitude from Zelensky as European nations rally behind Kyiv's truce proposals. European defense talks surge as leaders pledge higher military spending after Zelensky-Trump clash, and Germany considers new defense fund. EU extends COP target deadline for car makers to 2027, easing pressure on Volkswagen, BMW, Mercedes amid competition from US and Chinese EV rivals. Italian luxury giant Prada moves closer to acquiring Versace in a $1.6 billion deal as talks with Capri Holdings progress, with an agreement expected as early as March this year. Huawei stuns Mobile World Congress with Mate XT Ultimate, the first commercially available trifold smartphone, as Xiaomi and Lenovo unveils their latest offerings. US firm Firefly Aerospace successfully lands Blue Ghost spacecraft on the moon, becoming the second private company to achieve a lunar touchdown, marking a milestone in the growing commercial space to the race. All that and more on Morning Brief at 9 very shortly.
Women empowerment is all about letting the woman to remain the woman.
Perhaps you're right, because, we've seen what men have been doing all this time.
I think we are not nurturing and leveraging 50% of our strength, which are the women.
For an educated lady, even today, the problem comes when she becomes a mother.
If the world starts getting women led, I think a lot of things will get corrected.
I 100% agree with you. Humans are different. Our needs of each other are different.
A lot of responsibilities unduly rest on women.
For too long, women have not dreamt for themselves. They've been too afraid.
When it comes to women, a very, very focused approach should be there to create an ecosystem for producing champions.
And that is where we have to set that sort of environment.
The message to women was, let the spotlight of your life be on you.
We were constantly praised for any little thing that we did well. After all, we are the product of the history.
We are all dependent on each other. The men like you speak for women, speak with women.
That is the woman that you are. That is the woman you always wanted to be.
It will only grow from strength to strength.
I'm a positive thinking person.
I am defined by what I do.
I'm very pleased to be here.
Thank you, Varun. Thank you for those kind words.
I am, therefore you are. That should be the message from every woman to the men.
Watch Duologue with Varun Das this Women's Day all day long on News 9. News 9, English news as it should be.
Crime will never go out of the society.
Crime is a part there.
We do know people who have shot people. We do know people who are criminals.
They are real people.
They are good, bad, ugly, everything is within us.
Particularly me, Zishan Ghazri, yes, I have born and brought up in Wasipur.
Characters of the darker side are also human beings in society.
People there don't realize it's crime. They think it's a part of life.
When these two words collide, it sort of creates a magical surrealism.
So there is a good side, there's no black, so they are clearly grey.
Culture of that area, Dhanbad, is crime is part.
This and more streaming on News 9 Plus. Download now.
It's not the fiefdom of politicians. They owe it to the people. Matter is now more about faith of the millions of devotees than just political slugfest. Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense, they have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
Welcome back. You're watching Morning Brief at 9. I'm Shweta Kothari. It's official. There's no stopping it. US President Donald Trump has made it clear that Mexico and Canada have no way to block the 25% tariff which are set to take into effect today. The announcement sent shockwaves through financial markets, raising fear of new economic hurdles in North America. Meanwhile, Canadian Prime Minister Justin Trudeau is pushing back against US concerns over fentanyl, saying that Canada should not be blamed for the drug's presence in America.
But very importantly, tomorrow tariffs 25% on Canada and 25% on Mexico, and that'll start.
U.S. President Donald Trump said on Monday that 25% tariffs on imports from Canada and Mexico will go into effect on Tuesday.
On the tariffs, is there any room left for Canada and Mexico to make a deal before midnight?
No room left for Mexico or for Canada. No, the tariffs, they're all set. They go into effect tomorrow.
U.S. stocks plunged after Trump said there was no room left for a deal that would avert the tariffs by halting the flow of fentanyl into the United States. Mexican President Claudia Sheinbaum on Monday told reporters, quote, "We maintained communication. We have made the agreements and the necessary coordination." But she said the decision to impose tariffs rested with Trump and said Mexico was ready with a plan B, C, and D.
Plan C, plan D.
Trump on Sunday lauded a decline in illegal border crossings last month in a post on.
Moving on, Wall Street took a major hit on Monday as major stock indexes stumbled after US President Donald Trump confirmed that 25% tariff on Canada and Mexico will stay. Investors reacted swiftly to the growing trade tensions, with concerns mounting over the economic fallout. And the pressure isn't easing as Trump is also set to escalate tariffs on Chinese imports, doubling the rate from 10% to 20% starting today. The big question remains, how will this impact businesses and consumers in the US as well as worldwide?
U.S. stocks tumbled on Monday after President Trump announced sweeping 25% tariffs on Canada and Mexico, with the Dow dropping almost 1.5%, the S&P 500 shedding more than 1.75%, and the Nasdaq spiraling more than 2.6%. Trump said the two U.S. neighbors had, quote, no room left to avert the tariffs, raising fears of a North American trade war. Chris Bergotti, Chief Investment Officer and Managing Director at SWBC, said he's concerned Trump's aggressive moves risk tipping the economy into a period of stagflation in which prices may rise even higher while economic growth slows.
I expect these specific tariffs to be damaging to the economy while increasing
the prices of goods and services paid. So that raises the specter of stagflation a higher level, in my opinion, and that is the last place we want to go.
Trump is also expected on Tuesday to raise tariffs on Chinese imports to 20% from 10%. U.S.-listed shares of Chinese companies fell, with EV maker NIO losing 8.6% and JD.com shedding 4%. Chip makers also tumbled, with AI powerhouse NVIDIA shedding about 8.7%, Broadcom losing 6%, and Intel erasing early gains to close down more than 4%. Meanwhile, a survey from the Institute for Supply Management on Monday showed U.S. manufacturing slowed in February and an index of forward-looking new orders contracted, further reflecting tariff concerns.
And Bitcoin surged 20% from last week's low following Donald Trump's announcement that Bitcoin and Ether will be at the core of a new U.S. strategic reserve, sending shockwaves through the crypto market. Several other digital currencies also rallied sharply on the news, raising questions about how this decision could change the future of cryptocurrencies in the United States.
Bitcoin surged more than 20% from last week's lows on Monday. The crypto jumped after US President Donald Trump hinted there could be a new US strategic reserve that would include a range of tokens. Several other cryptocurrencies also rallied sharply. Trump said in a post on Truth Social his January executive order on digital assets would create a stockpile of currencies. It included Bitcoin, Ether, XRP, Solana and Cardano. Trump said Sunday Bitcoin and Ether will be at the heart of the reserve. Bitcoin had hit an all-time high of $105,000 earlier this year.
Hello, Bitcoiners.
But investors were disappointed Trump hadn't followed through on pledges to loosen regulation, and the token dropped over 17% last month. Bitcoin was last at around $91,600, up from Friday's low of just over $78,000. Ether was also up 20% from Friday's lows to more than $2,300.
And Britain confirmed on Monday that several proposals for a truce have been put forward following France's suggestion of a month-long ceasefire between Russia and Ukraine, leading to peace talks between the two countries. And while diplomatic efforts continue, US President Donald Trump suggested that his patience was running out. Trump also ordered a pause to all military aid to Ukraine as he demanded more gratitude from Zelensky. Now, with the war dragging on, the big question remains, will these new proposals bring any real breakthrough? And in absence of the US, can EU really broker a deal between Russia and Ukraine? The report tells you more.
Well, we're going to make deals with everybody to get this war, including Europe and European nations.
U.S. President Donald Trump said on Monday that he is committed to reaching a deal to end the war between Russia and Ukraine. He would just like to receive more thanks from Ukrainian President Volodymyr Zelensky for the role the U.S. continues to play in the conflict.
Well, I just think he should be more appreciative because this country has stuck with them through thick and thin. We've given them much more than Europe, and Europe should have given more than us because, as you know, that's right there, that's the border.
Earlier, Britain said several proposals had been made for a truce in fighting after France floated a plan for a one-month pause leading to peace talks. European countries are rallying around Zelensky and trying to hatch a peace plan that includes Ukraine after last week's Oval Office rupture between Zelensky and Trump.
You don't have the cards right now. With us, you start having cards. But right now, you don't. You're playing cards.
The two sides had been expected to sign a deal to give the U.S. access to Ukrainian minerals, but Zelensky left without signing it. British Prime Minister Keir Starmer told Parliament the prospective minerals deal is not enough to act as a security guarantee that would ensure Russia sticks to the terms on any peace deal.
The mineral deal is not enough. Zelensky is a war leader whose country has been invaded. And we should all be supporting him and not fawning over Putin.
On social media, Zelensky said his country had to engage in substantive diplomacy to bring to a rapid end the 3-year war with Russia, and he hoped to be able to rely on U.S. support in securing peace. Friedrich Merz, the conservative due to become Germany's chancellor after winning the largest share of the vote in an election a week ago, suggested Friday's Oval Office argument in which Zelensky was pressed to commit publicly to a diplomatic solution had been a pre-planned trap.
It was not a spontaneous reaction to interventions by Zelensky, but obviously a manufactured escalation.
Russia has not concealed its delight, praising Trump for changing U.S. policy and denouncing Zelensky for challenging him.
Shares of European arms makers soared on Monday as investors bet on higher defense spending across the region. The rally comes after a summit in London where European leaders agreed to boost military budgets just days after a tense exchange between Ukrainian President Volodymyr Zelensky and US President Donald Trump.
Shares in European arms makers surged on Monday. They were boosted by the prospect of higher spending in the region. At a summit in London on Sunday, 2 days after Ukrainian President Volodymyr Zelensky clashed with US President Donald Trump, European leaders agreed they must spend more on defence. Separately, Reuters reported that parties in talks to form Germany's new government are considering setting up a defence fund. Gains in defence stocks drove a broader gauge of aerospace and defence companies up more than 6% to a record high. The index has more than doubled since Russia invaded Ukraine 3 years ago. Janet Moy is from RBC Brewin Dolphin.
The increase in defence spending is one area that has some more visibility. At least I think there's a lot of commitment, and it is in fact essential, right? I think Europe has admittedly been underspending on defense for a while, and finally it is likely to ramp it up. And I think particularly investors are confident that the new German government would be able to borrow more, relax its fiscal rules, and also there's a likelihood to establish a defense fund.
JP Morgan analysts said the events of the last 2 weeks have turbocharged their thesis of a European rearmament cycle, with Europe seeking to gradually make more of its own military equipment and import less from the US. Shares in Europe's biggest defence company, BAE Systems, had risen around 15% in Monday morning trade. Germany's Hensoldt, which provides sensor systems for the Eurofighter, jumped around 30% to a record high.
And moving on, Italian luxury giant Prada is reportedly sealing a deal to acquire Versace from fashion group Capri Holdings. According to news reports, the two companies have agreed on a price of nearly $1.6 billion. Capri Holdings, which also owns luxury brands like Jimmy Choo and Michael Kors, could finalize the deal with Prada as soon as March of this year.
Prada is getting closer to a deal to acquire Versace from fashion group Capri Holdings. That's according to weekend reports by Bloomberg. It says a price of about $1.6 billion has been agreed. The report says Prada and Capri, which also owns labels like Jimmy Choo and Michael Kors, could now agree a deal in March. Talks are reportedly progressing after a due diligence process failed to show up any risks. Experts say owning Versace would allow Prada to target a whole new range of customers with tastes far removed from its trademark minimalism. There was no comment on the report from any of the parties involved. Last week, Miuccia Prada, the owner of the fashion group that bears her name, said numerous other companies were interested in acquiring Versace. Italian media reports say Renzo Rosso, founder of the fashion label Only the Brave, is among those interested. In February, Reuters reported that Prada had been given preferential access to financial data on Versace after it was put on sale. Capri bought the fashion house in 2018. It's been working with the British bank Barclays to find a buyer.
And moving on, the European Commission has granted automakers more time to meet the upcoming COP2 emission targets. The Commission on Monday announced that car makers will have at least 3 years instead of just one to comply with the 2025 emission limits for cars and vans. The decision comes after pressure from European automakers who had warned that strict timelines could hurt production as well as investments and incentives going forward.
Shares in major European automakers rose Monday. Investors were pleased when the European Commission gave into pressure to extend CO2 emission targets. Top car makers will likely have 3 years rather than 1 to meet the targets for their cars and vans. Meeting such levels relies on selling more electric vehicles, but that's a segment where European car makers are behind Chinese and US rivals. Von der Leyen said the targets stay the same and they will have to fulfill them. But she added it means more breathing space for the industry. Shares in Volkswagen, BMW and Mercedes-Benz rose after von der Leyen's comments. Industry sources said compliance would be based on the average of the period 2025 to 2027. EU car makers have been hit recently by factory closures and now face US tariffs. They've urged the Commission to grant relief from fines they say could rise to $15.7 billion if their fleets do not meet limits this year. The EU executive is due to publish its automotive plan on Wednesday. It aims to make sure EU car producers can electrify their fleets and compete with more advanced rivals like Tesla and Chinese producers.
And moving on now, Huawei showcased its latest innovation at the Mobile World Congress in Barcelona, drawing attention with its new tri-foldable phone, the Mate XT Ultimate, highlighting advancements in flexible screen technology. Visitors tested out the sleek design and improved durability of the foldable model, with demonstrations emphasizing its seamless transition between smartphone and tablet modes. Other major brands such as Xiaomi and Lenovo also introduced their latest products, including the Xiaomi 15 Ultra Advanced camera and Lenovo's ThinkBook lineup. US firm Firefly Aerospace made history with its first successful moon landing. The company's unscrewed Blue Ghost spacecraft touched down on the lunar surface, marking a major milestone in growing competition among private firms in global moon race. Take a look.
Y'all select the landing. We're on the moon.
Firefly Aerospace succeeded in its first attempt to land on the moon. It landed its uncrewed Blue Ghost spacecraft on Sunday to kick off a 2-week research mission. The craft is the size of a company car and carried 10 scientific payloads. Firefly became the second private firm to score a moon landing, though it declared itself the first company to make a fully successful soft landing. Texas-based Intuitive Machines made a lopsided touchdown last year with its Odysseus lander. 5 nations have made successful soft landings in the past. The US and China are both rushing to put their astronauts on the moon later this decade. Each has courted allies and given their private sectors a key role in spacecraft development. The US plans on sending its astronauts back to the moon in a series of crewed missions starting in 2 years. China is also making quick progress. It plans to land astronauts on the moon's surface by 2030.
All right, let's now, before we close the show, take a look at how markets are reacting as of this Tuesday morning. Remember, it's a crucial day where the 25% tariffs on Mexico and China will come into effect. That has reflected very poorly on global markets, especially Asian markets, and Indian markets also reflecting a similar sentiment, with Nifty now down 0.5% at about 22,000. So holding that crucial 22,000 level, that test of 22 would be defining how markets will react in the days forward. Sensex is down about 0.27% at 72,887. Nifty mid-cap marginally down 0.18% at 47,897. Small cap were green shoots there, up 0.5% at 14,737. Being an outlier there in the entire pack, small caps up about 0.5%. India Wix is also up marginally, however, 0.27% at 13.80. Those are the markets as of this morning. Remember, on Monday, the Indian stock market ended lower amid volatility, with benchmark Nifty recording 9th consecutive day of losses. The Sensex also declined yesterday, albeit relatively flattish at 0.15%, and Nifty settled marginally lower at 0.02%. But there are concerns, of course, continuing over FII selling. As I mentioned earlier, imposition of tariffs by US on Canada, Mexico and China, and of course the ongoing geopolitical tensions with Russia and Ukraine continuing their war for third consecutive year, impacting both Asian markets as well as domestic market sentiments. Stocks in Asia Pacific region also opened higher on Monday, shrugging off some of those concerns. However, as of today, Asian markets are also trading lower, tracking the overnight losses on Wall Street after Trump's tariffs on Mexico and Canada. The US stock market ended sharply lower on Monday after President Trump announced the 25% tariff. Both Dow Jones Industrial was down by 1.5% and S&P plunged about 1.76%, as well as Nasdaq plunged about 2.64%. So lower global cues, weaker global cues and lower US market endings, resulting in overall downfall and downturn in Asian markets, and that sentiment also being reflected in Indian markets today, with both Sensex, Nifty taking a beating, although recovering from their lows of 0.64% early this morning. We will be tracking all those global cues and markets, but time now for a short break. We'll be back with more news and updates on the other side. You were watching Morning Brief at 9.
Women empowerment is all about letting the woman to remain the woman.
Perhaps you're right, because, we've seen what men have been doing all this time.
I think we are not nurturing and leveraging 50% of our strength, which are the women.
For an educated lady, even today, the problem comes when she becomes a mother.
If the world starts getting women-led, I think a lot of things will get corrected.
I 100% agree with you.